Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's September 10th. Hope you guys had a wonderful weekend. Hey, let's jump ahead here. We have no economic news scheduled for today. Today's kind of a light day, but we do got some Fed speak going on, and that's kind of what's kind of more or less moving the markets. Markets are mixed today. We got the Dow's only one that's in negative territory. The other Nasdaq and S&P are in positive territory. So that's what's kind of moving along. Some of the talks that we're hearing are conversations that were going on today, as well as parts of last week and the weekend. Um, there's been a lot of talk about this yield curve, and with the next meeting that comes up, they're expected to raise interest rates, and with that next hike, could most likely hit a flat yield curve. And with the economy moving as much as it's moving by December, there's a very good chance they could raise rates again so that way we'll have 1% rate hikes this year. And what would that translate would be basically put us into a yield curve. Now, over the past, when we hit a negative yield curve, we've typically have gone. It's been a good indicator of a future recession coming ahead. Usually, it could be about a year, 6 to 8 months, or maybe a little bit longer, maybe even a year. Now, that's what the concern is. A lot of critics are saying, "Hey, you're kind of forcing us into a recession here," but you got the Fed who's also trying to put us into a neutral territory where if we do go into recession, we're gonna have to go backwards. So the point is why are we going up? Why don't we just keep steady? And then why keep going up when you have to go backwards anyways? When you're kind of, in a sense, forcing us into a recession. And basically, some of the indicators we're getting from the Fed is that they're not really looking at yield curve. They're not really don't really care about the yield curve. They're trying to get ahead in the into the rate curve and try to put us into a what they call a neutral territory. So that way, hopefully, it doesn't affect us one way or the other. But again, it could slow things up, and that's what part of the concerns. And of course, talk about the trades that retaliations of the trade, because President Trump had mentioned last Friday that not only do we have $200 billion on the table for tariffs against the Chinese, we have another 267, so for a total of 467 billion tariffs, and of course retaliations. China couldn't really go tit for tat exactly for that much because they don't take as much of that from the U.S. So they may go another avenue. So we'll have to kind of see how that plays out. And again, our trade partners just couldn't go into a full-fledged trade war, which could affect the global economy as a whole, slow things up, and that's what the investors are looking at, a slowdown in the possible global economy. So here's where we are bond-wise. We had a big drop on Friday. We were down about 32, 33 basis points. So put us down below this, which was our floor of support. Now it's put us below that. We're up about 2 or 3 basis points now, still below it. The positive side of things are because we have come down a bit. Looks like the stochastic indicator here is we're in an overbought position or oversold position, excuse me. And as you can see here, we may have a cross positive crossover here. So if that happens, we could see a nice improvement. We could see a possible improvement here and put us back into this neutral territory. We'll have to kind of wait and see. It's not coming in. As you can see, we've come close where we've kind of come up and then we kind of pull back a little bit. So we don't know for certain until possibly by tomorrow if we get that crossover or not. So we just kind of have to wait and see if we get that or not. But many indications are many lenders will be in worse pricing today due to they might have been priced earlier in the day, Friday, at, about this level here, and then add additional negative pricing. So technically, we are where we left off on Friday, but some lenders may have a little worse pricing due to they priced earlier in the day where the market wasn't as bad and didn't reprice later in the day and are repricing today based on the new placement of where we are. So, all right, so pricing for the most part, most likely will be negative today compared to where we left off on Friday. And here's the yields. We did break above this level here. As you can see, we're not quite there yet. So this is why we could potentially see a little bit prolonging of it. So I'll just kind of wait and see. We're in an area if you have the time to wait, go ahead and wait on locking. If you're on refinance or purchase, if you have the time to wait, go ahead and go ahead and wait. If not, obviously you want to lock in and take advantage of it. All right, folks, that pretty much wraps things up. I do post on Twitter. You can follow me at Mike Bjork and get the latest. Any market changes will be posted there. You guys have a great rest of your day. Thanks so much for watching. I'll see you guys tomorrow. Bye-bye.